Hi everybody, Alex Deploy here from Expert Forex, and in today's video I ask the question, are past trading results and popularity good guides when copy trading? And there are some really simple mistakes people make when they are new to copy trading, and I'm going to point those out. As always, I must make the disclaimer that past results are not guaranteed to repeat into the future. Forex trading is risky and you can lose all your money. Now here I am on the Exclusive Markets website. Expert Forex runs its copy service through the Exclusive Markets social trading platform. So that's what you do, is you go to social trading, you click on copy trading, and here is the page on copy trading. So what I'm going to do is I am going to just scroll down here on the page, and while I'm scrolling down here, it says how do you start copy trading. Firstly, you open an account with Exclusive Markets, then you complete the copy trading subscription registration, you subscribe to a provider, and then you monitor the platform. It's so easy. Those are the 4 steps. And then further down, they provide you with the list of signal providers that you can link to. And there are about 500 of these accounts that you have to work through. So it can become overwhelming. And the shortcut is often, let me just go with the ones that are the most popular, that have the most investors and have the highest income, because that's a nice shortcut a typical beginner at this game would do. So let's go back to the question that I asked. Does the return or the past results and does the number of investors provide a good guideline as to which accounts to invest in? So I'm going to work through that now. So firstly, this list is very historic, because the first guide that there is that how can this be such a popular account if it only has 3 cents in the account, or nothing in the accounts, or $1. So that's the first guide that you need to look at, is how much is actually being traded by the signal provider. That's the first guide you would do. But let's come back to the basic question that I'm asking here, is the return or the number of investors a good guide for you to follow? And what we'll do is we'll take anything over 20 investors as being a guide to invest in that account, and then look at the return, and you can see some of these returns are actually quite amazing. So let's just go through them one by one. These have already been disqualified at the moment, but they have 107 investors. So let's just go and have a look at this particular one. It has a fantastic return of over 1,000%. But let's go and have a look at the details. And to do that, you just click on the name, and it will bring up more information about the investment. Now, I'm going to short circuit everything, and I'm going to say go down to the most important information, which is right at the bottom. So these are the monthly returns that have been generated. Now, immediately you can see this account generated all its returns last year sometime, more than a year ago, and then after that it actually was doing nothing, and in fact it's just making losses at the moment. So that's the first thing you look at. You say, why should I invest in this if it's just making losses? Although the statistics look fantastic. It says your average return is 16%, and your average weekly return is that. It's all hidden by the fact that the returns were made in the first 2 months, and then after that nothing. This one partially answers the question, can we rely on past history? You have to go and look at what past history looks like to get a feel of whether it's investing, and certainly nobody would invest in something like that. Then the other thing so this one's automatically already disqualified, but the other thing that you should look at is drawdowns and equity. If you click on equity here, you will get the maximum drawdown. So at some stage there was a 77% drawdown on the account balance. So this account is not an attractive account to invest in, and yet it shows that there are 107 investors that are following this account, and that the returns have been phenomenal. So don't get blinded down. That's one example. So let's just carry on. Here's another one. This one's got 266 investors. It has a nice balance, so it's starting to become a valid account. It has a reasonable return. So let's have a look at that account. Click on that one. The first thing I do is I go right down to the bottom, and we have the same profile. All the money was made early in the life of this account. There's the fantastic returns, almost 100% in 1 month and so on. And then after that, if you add all of this up, it's all basically a net loss. So if you look at the overall statistics, average return of 8 and then per month, and then a 2% return weekly. It's absolute nonsense, those statistics. But you have to look at the profile of the monthly returns. Let's have a look at the drawdowns. And the drawdowns, 58% of the account was drawn down at some stage. So we're starting to answer the question, are past results and popularity a good guide to making investment decisions? So far, we would have failed terribly by these first two investments if we had backed these first two accounts. So let's just carry on. Oh, here's a nice one. A lot of money being traded there. Nice return. Equity chance reasonable. 24 people following that one. Let's go and have a look at what that one looks like. And we have the same profile. All the money was made in the in the beginning of this strategy, and nothing after that. You can see at the moment in June it's making a loss. So again, this one gets disqualified, and we can, although it's been disqualified, we can look at the equity drawdown of 30%. So those two items. So the first three examples that we've done have started answering questions. Oh, there's another one. This one's got a reasonable amount of money in the account, reasonable return, equity charts not too bad. Let's go and have a look at this one. So we go all the way down, and again you get the same profile where all the money was made early in the life of the strategy, and it just went down, down, down as it's going. It's not too bad, this one, because although this is quite low, it's actually still about 5 or 6% a month, but it shows you how deceiving these statistics are. Average monthly return, average weekly, totally deceiving. So again, we wouldn't invest in this one because it's going down. And let's have a look at the drawdowns, roughly 40%, again a high drawdown number there. Okay, so let's carry on. Here's one gold, a nice amount being traded, and let's go and have a look at this one's profile. And we go all the way down, and again a lot of income earned early in its life, and not so good afterwards. But although again, look at this is actually still 7% a month. That 7% a month is still acceptable. That's 20% a month, and then that was over 100%. So again, these statistics are very unreliable. The latest statistics are more representative. There's a monthly return of 6. So it's not too bad, this one, but certainly not where we want it to be. And equity, there was a 20% drawdown. It's most probably the lowest drawdown we've seen so far. Okay, so let's go and do a few more examples of this. All right, there we've got a 24 investors, nice return being generated, a nice amount being traded. Let's go and have a look at this particular one. So we go down. Again, we had a losing month. So we had a really great month, then we had a losing month, and then we had a really great month. Now, this might appeal to risky traders, but again, it shows you the average return is deceiving because it includes losing months, and you have to take that into account. Drawdown, a 62% drawdown, pretty high on that particular strategy. All right, let's go and see if we can find another example. We've done that one. Let's go to the next page. See, there are 28 pages, so this could keep you busy for quite a while. All right, here's one. In fact, one of Expert Forex's accounts. Let's go and have a look at the profile of this one. 43, nice amount being traded, nice return be generated. Okay, so we have a look. Now, I haven't really spoken about equity charts, but you can see this one's pretty smooth. And then, this is more the profile that we're looking for. These accounts go for roughly a 5% return a month, and it's been achieving that quite nicely. There's a bit of a holiday there in November. And so this is a much steadier performing strategy. It gets just over 1% a week and 5% a month. So this is what we're looking for. We're looking for robust and steady earnings. And you can see the length of it. It's 13 months that's been shown here, really good. And let's have a look at the equity. Drawdown is 24%, and I think the drawdown is pretty historic. That's most probably the 24% is it's been much smoother since then. So here's an example of where popularity and return is a guideline, but you've got to look at the monthly returns in a little bit more detail. So let's go. So that's the next one, and we'll maybe do one or two more accounts. So that one we've now done, and that's the first one where we could have said, this is a good guide, but you need to do more homework. You need to look at the monthly returns. It's popular. Oh, there's another popular, really popular one. 66 followers or investors, return of 60%, a reasonable amount being traded. Let's go and have a look at what this one looks like. And away we go. Oh my goodness! Again, you can see a reason. Most of the returns have been done in 3 months of 3 really good months or 4 really good months. But the rest is really look at the last 8 months or so, really poor results. Not the kind of account that you want to link to. Even the averages aren't looking good. 2% return a month is not good. So that is why you need to look at this and the averages and relate the two. And then I guess the drawdowns might not even be bad on this one. Maximum drawdown 44. That's not good at all. Okay, so let's just carry on. We can do this one. It's 20, a nice return, nice amount traded. It's scalping about 18, and let's go down. And another fairly nice steady income, just under 10%. There's just under 10. June has still got some time to go now, so it will must probably go over 10%. And it must probably started in the middle of March. So really, this is more the kind of profile we're looking for. Monthly return of about 10%, weekly return of 2%, 2.5%, really good. So, and let's have a look at the equity on this one. 6% drawdown, really, really good. And I think this is most probably the end of our little exercise. And now you need to be the judge of this. As you can see, most of those statistics are extremely misleading. You cannot just use the return that is generated and the number of investors that are following that account to make a decision whether to invest in that account. You have to look a little bit further. And I showed you that the next step is really just to look at the monthly return chart to see how smooth that is, how steady it is, and what the latest few months performance looks like. That's a much better guide. And also then at the same time to have a look at the maximum drawdown statistic, which can be a good guide as to the risk involved. The smaller the drawdown, the lower the risk, the higher the. Now in the next video, I'm going to do something more positive. I'm actually going to show you a couple of accounts that have fantastic performance, but that are not followed because they don't have lots of investors, so people don't invest in them, and they don't have the greatest return you can find, but they still are performing really, really well. So I look forward to that one because that will be more productive to you, give you an idea of which accounts are the ones that we'll be looking at. And I think two of the accounts that we looked at in this video were not bad at all. In fact, the 330 CA1 is most probably the pinnacle of consistency and reliability in terms of trading strategies. But we'll have a look at many more accounts that are being totally ignored by investors because they sometimes do not use the best investment criteria there is. So from me, Alex Deploy, cheerio. Just a quick disclaimer, this video has been made as an educational, entertaining and informative video for its viewers. It is not personal advice, and what works for some traders might not work for you. Please consult your financial advisor before trading. Trading is very risky and you can lose all your capital. It is not a get-rich scheme. Past results do not guarantee future results. There is no guarantee of easy success or good results in Forex trading. You cannot achieve the same results in the future by simply copying strategies and settings used by other traders in the past.